Waves. Waves happen in the market when volume changes from buy to sell, sell to buy. That's why we have these candlesticks, bars, Renko chart, line chart, whatever we use. That's why market goes up and down. And one thing we must realize from now on is that this is not a video. This is not entertainment. This is an action plan. You can improve your trading from today with part of these videos that you will see. But it's also important that you understand this from the very beginning, because we will go more and more advanced. And if you miss something, and if you don't understand something, after this video, ask your questions so everything is as clear as it can be during a short video. In this video, we are only going to mark up waves. And how do we do that? Normally, when you start a wave structure in the market, you come from a peak at the top or a peak at the bottom. Normally when markets change direction. You can of course start counting waves as you want, anywhere on the chart. If you find a method for that, do that. This is not meant to be, this is how you must do it. This is meant to be, you can use it if you want to. So let us get started. We start at this bottom. We can start here, we can start further back, or we can move forward. Doesn't matter, same thing all over the place, all markets, anywhere. The bottom, it's called 0. Market moves up to wave number 1, or we call it A. Now we have started to potentially make a new high that may fall back some, and that may create our first number 1 high or first wave. What many times happen is when you see a high like this and a candle can't take out the high, you see this bullish one here, when a candle, the next candle or the candle after that, can't take out the low wick of that one. It can be a fake wave when you count waves. So keep that on your mind, that if the market can take out the previous candle's low, it can be your solid wave number 1. And you see how this bearish candle do that. It takes it out, doesn't have to close below it, just takes it out with its wick here. Okay, and market moves down, market moves up. And for us to go to the next wave, price must break this one. It can be a wick, preferred or closed body, but it can be a wick. Must just be higher to even be called wave number 2. Market do sideways. Market moves up higher. From this candle, this could be wave number 2. But it doesn't fall back, as you can see. It just keeps going and going and going until we come up here. Is this wave number 2? See how this highest candle here, this gold candle here, has its low down here. And price couldn't strike back below that one. It's not a strong reversal. So if you're a wave trader or counting waves, you probably want to have that as one of your rules. We don't have to, because we have a better way to do this. But I want you to understand this, how many traders think about new highs, new waves, right? What happens here is there's a short 8 hours mo. This is a 4-hour short. Short 8 hours mo down. Couldn't take out this one. we can still mark this one out as second wave, right? We do that. Or B in this case, 1, 2, A, B, red, green. You can call it whatever you want as long as you understand what you're doing. Market moves up higher in the same structure. See how this highest candle here, this is not the highest candle simply because it's a bearish candle. The bullish candle, it must be bullish candle when you do highs, a bearish candle when you do lows, right? There are many variations how you can do this. We're not going into that tonight. When you see it coming up here, where's the low of this one? See this golden candle here, the highest one? You have it, the low there. Market takes it out. So in live trading, you will say, okay, this is my wave number 3, right? This number 2 or B, we know it by now, is most likely a fake wave. It's not the real number 2. But in live trading, it's not that easy. So if you mark it up like this, it will be totally fine. Because all you want to keep track of is 3 waves up or down. That's the golden rule. 3 days, 3 weeks, 3 months, whatever how you count it, but 3 waves up, 3 waves down, right? Because this 3 waves will not be a problem for us in our way of trading. But if you were did a simpler system, in this case up here, we will come to that later, you will see something we call a golden wick here. You will short it here and it wouldn't pay out as you expected. Simply because we didn't qualify more than 1 and 2 new waves. Because these 2 were taken out with a low highest candle. This one was not. See that? So what I'm going to do now, I'm going to move this one, call this number 3 and this number 2. Okay? That was a deep understanding in how you should look at your waves. And mark it up with this one or with numbers, doesn't really matter. Okay? Now, what you see, the market is moving down. And it started to do a smaller down wave inside of this uptrend. So what we have to do, we start again. Remember, you need only to count to 3 here. 1, 2, 3 or ABC. So this is our 0, like we did down here. Remember that? This one, see how that is the high now, because this is a bearish. Now we are counting downwards. So now we want to see the other side of the deepest candle. See how it take it out with this wick? Perfect. That means we qualify wave number 1 there. Right? Market breaks it, comes down. We come to the lowest candle that is bearish, this one. We wanted to break this one on the upside to be called number 2, and it do that. We can mark it up as number 2. Market moves up, market breaks, coming down for the 3rd one, which is there, right? And as you can see, make them red for down or green for up. And as you can see now, we have 3 down waves that did exactly what we talked about. The lowest candle was taken out on the upside. The lowest candle was taken out on the upside. The lowest candle was taken out on the upside. Okay? The 3rd wave is mostly where you enter. So you don't need to really check this on the 3rd wave. You just want to make sure that it is broken wave number 2. So when you come to wave number 3, that's the highest probability where most markets will reverse, give a real push in the opposite direction before it continues. It can be a retracement, but you have opportunity to trade there, and it's the safest place to start trading from wave 3 or more. So when we know this, now we know how to draw or count wave up or wave down. We're going to continue, but before we do that, there's another thing that you need to know when counting waves that is very important. When the market starts as a peak like this, or a peak like this, or a peak like this, for a market to reverse in this situation, we would look at this one, because here is downtrend, right? From here, we can consider it to be a clean uptrend, right? Wave 1 and 2 can be below this line here, but the 3 cannot. The 3 must always be higher than last structure break. And you can see in this case, that was not a problem, because wave 3 is up here. Same thing here, 1, wave 2, both 2 are below latest structure point or break point here. And 3 happens below, which is must. Otherwise, is a very low probability to be a reversal that is coming. Basically, you need to take out something with the wave 3 to make it a proper trade to take. Okay? The reason I want you to show you this is because sometimes you will see market do small waves like 1, 2, and 3 here, and say, wow, I have a trade setup, possible trade setup, but you haven't broken the last high or the breaking point here. And those waves and those count of 3 waves, you should be very careful about, because they are very dangerous to take. It may work out, but it has the least probability to do that, because it's a visual thing. And if you keep your rules simple, wave 1 and 2 can be in the last trend direction, but 3 must always reverse the market and be higher, or reverse the market and be lower. So this is the only thing where what you should start practice on the chart. Again, we have went 3 levels down or 3 waves down. We start doing this again. 1, see, we take out the low of this last highest candle. Good. And if we didn't, we could still count it with our system, because we are not using waves the way many do it. We will use it a little different, which you will see as we progress in the webinar. This one, breaking point was here. We can easily see that the wave number 2 will be up here. 1, 2, from this 0 point, right? What the market do? This is the highest bullish candle. This is the highest candle, but it's a bearish one. So we look at this one. Can we break its structure with the low of it? Yes, we can. The first candle actually do that. Then therefore we can consider it to be wave number 2. Moves down. 1, 2, 3 up. You see it here. This third wave didn't really break anything. I just want to show you how it can look like when it's inside of the same structure. If it can't break out of anything, it's more than likely not a good reversal point. Now what happens here is the wave 3 for us. Remember, this was our break point. We easily broke it, come up to wave number 2. What do we have here? We have a wave 3. Because a wave 3 only have to break a higher or test a higher price. Then it can't fall back, right? Like it do here. 1, 2, and 3. Maybe should move down this a little bit, and then we change color of it. So they become green. So you can separate them easily here, right? Okay, so you see how there have been 3, 3, 3. Now something interesting happens. Pay attention to this. We start with 0 up here. It's just a marker for, this is actually an Elliott wave tool, but it looks better than having numbers on chart, right? So this one is the peak, right? So we expect a move down from here. Doesn't mean it will be, but that's highest probability for it, because it is mode 3 waves up. We come down here. We go up here. We move down here. You see something with this structure that doesn't match. It's a down wave, right? This one will be red shortly. It's a down wave, right? This is our lowest candle. It didn't break that one on the upside for sure. This one is body closer. So remember what I said, in live trading, you will not do what you do when you do this in hindsight. To say, oh, well, that's wave 1. So I put this one here, right? Which is totally fine, because we are humans, we are traders, we see things, and then we realize it was wrong. Well, that happens. We break this one, come down here. We break this one on the second candle, see that? 2. Then I'm going to place this one here, 3. Now, here is why you need to be an educator and informed trader. You see how we do not do 3 waves. It's no guarantee it will be 3 waves, but it's where we should look for new trades. Unless we are educated in this. Because this point, we will come back to that one in another video. Why this didn't do 3 waves. Because retracement for good new orders in the current up direction in this case normally don't do 3 waves before it continue. So this one here, if that didn't do 3 waves, it would totally fine, because we are going to use something else. So therefore, you can't just marry 3 waves down or 3 waves up. Not how it works, right? This is an excellent one. I'm going to take this one because I want to show you this. Because now I can show you exactly what I talked about. If this is 0, this is 1, right? This is the highest, it was taken out, good. This is the highest, it's taken out, great. We had 2 waves. This one breaks. There. It's not a bullish one, so I would ignore it. But again, when you're live trading, you say, oh, well, it's 3 waves up, right? Cool. Right. You see a problem with this up move here. If we were marking this one now as wave number 3, this was wave number 2. And we call them bullish. What has this number 3 not done? Hasn't broken the reversal point or the structure point or so on, right? See that? Therefore, accepting this as a new up wave would be much higher risk. In this case, it worked out fine. And there's another reason for it. And as we progress tonight here in the webinar, you will see exactly why this was not where you should be counting waves at all. Because we have something else that will provide us with the information we need, that from this point here, we should only be buying now for much more than this. I wanted to show you here 3 waves, but no no third wave above this one. Therefore, it's not a valid 1, 2, 3 waves here. Right? Instead, what this one do, it makes one here. But you see how it do not take out the low of this one. So I will call this at number 2. Still, nothing is perfect, but this is how it looks. Or you can actually do this one there. So now you know, okay, to break this from downtrend, because remember, we are in uptrend, but here is a smaller correction. In this downtrend, to break that one, we need this one or possibly this one to be wave 3. But now we are marked up 1, 2, 3 up. Okay, let's see what the market do. It all of a sudden takes out this high up here. And this, the first one that we can actually, this is the first candle that we actually can break the low point of there. But remember, when you come to wave 3, you don't look at this, because that's your, most of the time, it will be your entry for a new order. You only look at this for wave 1, wave 2, confirming it that way. I tell you this because you may be doing waves, and if you understand this, especially on lower time frames, when this taking out the low when you're going uptrend, or taking out high of the lowest candle when you're going down wave, can help you a lot in how to qualify what is a new higher high, what is a new wave, what's a new ABC, etc., etc. Okay, this was our 3 up, and market again comes here. And in this situation, I know this was a tough downtrend for many, and I couldn't really see. As you see here, there's no clear. This, if this is the first wave down, let's mark this. This is the first wave down. You couldn't take out this one. See what the mess it is here? Wicks and all this stuff. I would say this is the first low, because it has my rule, and this mess here. But this mess could actually be extremely profitable for you if you know what we are going to know when we come to adding the half trend to the chart, the indicator that we use for the weekly preparation. But this will be one. Whoops, this one. Market moves up, and there's number 2. We put the number 3 side by side so far because we don't have one yet. See that? Okay, so in this situation here, what is market doing? We don't know. We can predict the future. We can only watch to see, okay, we are right now going pretty much sideways on the 4-hour chart. Right? If we would break this point and move to a third wave, possibly this one. Let me put it this one. Possibly this one. Possibly this one. Right? Logic still there, but you are counting waves. You're marking up waves right now. So is this a good or bad wave structure? I will say in this situation, this is not a place where you should actually count waves, because when it looks like this, it's really, really hard to define them. You can mark them up, but you should be aware that this is a requirement of some experience, some larger view of the market. What are we doing here? Is this, for example, a big head and shoulders? This is a Quasimodo. What is it, right? So just because you sit and count waves, you also need to pay attention to what is market actually doing. Because normally when it looks like this and it's failing, it's because it's either larger consolidation or you have missed something, and that's why you log your trades. So you can note down, say, okay, when it was below, let's say it was below the so-called half trend indicator, I couldn't find a good first wave within 30 candles or whatever it is. This and this happens. So you have data on it. Next time you come to such situation, you know by looking at your book or your journal, say, okay, this happened 3 months ago and the outcome was not good. Stay out. If in doubt, stay out. So now we have learned how to count waves. It's a longer video, but it's so important video, because if you understand the 3 waves, up and downs, and know where you should be looking for trades, especially on gold, then you have a huge advantage over many traders out there. Thank you.